Mahindra Finance put out its fourth quarter numbers, a very strong set of numbers that the company's put out. Profit after tax up 34%, top line up over 40%. We've got the management of the company, Mr. Ramesh Iyer, Managing Director at Mahindra Finance, joining us on the show. Ramesh, to begin with, if you could just take us through your fourth quarter numbers, explain to us what led to growth in top line and bottom line.
As far as the top line and bottom line is concerned, both have grown at 45%. And the reasons for this kind of a growth on the top line first would come from our multi-product approach. We are now into commercial vehicle, construction equipment, second-hand vehicle, and cars beyond even Maruti. And if you look at our previous year, it was largely driven by utility vehicle, tractors, and Maruti cars. While we continue to maintain our leadership position on these products there, the additional products that we have got into has led to the growth of disbursement and top line. As far as the bottom line growth is concerned, one, of course, even though the borrowing cost did go up, we've been able to pass on a substantial portion of that increase to the customers. But more importantly, our NPAs have come down. If you look at the gross NPA from a previous 4.1% has come down to actually a 3% level. On a large AUM of 20,000 crore plus, if 1% improvement to NPA means substantial improvement quality. As far as overheads are concerned, the productivity of each of our branches have gone up due to this multi-product, and the overheads have also come down by at least about 0.5, 0.6%. So I think the overall improvement in the margins have been resulted due to low NPAs and low overheads, while the borrowing cost did remain high, but we have been able to pass on most of this increase, but we were uncovered on up to about 50 basis points on the interest is concerned. So I would think overall improvement has come from multi-product disbursement growth, and we have also added about 60 branches during the year, so which has helped us increase volume across the regions. And of course the improvement in quality and reduction of overheads have net contributed to this 45% growth. On an overall 12-month basis, the top line grew by 41%, the PAT grew by about 34%, and the disbursement growth was about 35%.
So, Mr. Iyer, if you could also tell us what your credit growth target and disbursement pipeline is for FY13?
Normally, I would like to avoid giving you a forward-looking number, but what I can tell you is that strategically we'll continue to add more branches. We last year added about 60-odd branch, and we believe we'll continue to add about 50-odd branch during this year. Our focus will be on commercial vehicle, construction equipment, second-hand vehicles, and car beyond Maruti for our growth during this year, while we will continue to focus on increasing market share for the utility vehicle, tractor, and Maruti car segment is concerned. We are not overly concerned about the asset growth possibility because we largely represent the semi-urban rural market, and with a very large existing customer base who also help us grow the business. And interestingly, I must tell you, we've crossed 2 million customer mark during this year, and of which about 1.3 million customers are even live today. And I think this is the base customer which will help us really generate more business from this market. And on the capital front, we are well capitalized. We have a capital adequacy of 18% plus. We have a multiple source of borrowing from banks, institutions, insurance. We also have a fixed deposit program. So all of this together, I don't think we are overly concerned really both on the asset and liability side as far as the growth for the future is concerned.
And if you could tell us, Ramesh, how the margins panned out for the company in the fourth quarter, and if you could give us an outlook.
As I said, the margins were under pressure not because of our inability to pass on, but it's also due to the product mix change. So it's not really that the margins were under pressure that we were not able to pass on the borrowing cost to the consumer, while we were uncovered up to 50 basis point. But if you look at as we speak now, since already some kind of a rate reduction is in the cards and we have started seeing them coming down, we would expect that even our borrowing cost will start reducing from this moment onwards. And since almost all our retail assets are on a fixed rate basis, we only expect margins to improve if the borrowing cost reduction gets passed on to us.
And how has your fee income been through the quarter?
See, we have a subsidiary company which is the Mahindra Insurance Broking Company, and that's one source of fee income for us which comes either in the form of a dividend on the basis of the profits that this company makes. As otherwise, our other fee income is actually surplus invested. If whenever we have some surplus funds, we do invest them in liquid formats. So that's some source of income that we get. We also have a mutual fund distribution license. While it's not a very large business at this stage, but some fee do come through that as well. As otherwise, we do not have any major platform for fee-based income at this stage.
Ramesh Iyer, thanks very much for coming in on the show with actually walking us through the company's fourth quarter numbers.